Everyone said the stock market exploded because the war was ending. But what if that's completely wrong? What if the biggest rally of the year had almost nothing to do with peace and everything to do with Wall Street getting trapped? Because behind the headlines, billions of dollars were forced into the market and almost nobody noticed. 1. When the ceasefire announcement hit the news, investors celebrated instantly. The S&P 500 surged. Tech stocks jumped. Oil prices dropped. Financial media called it a relief rally. Simple explanation, right? Not exactly. Because while the headlines were talking about peace, many of the underlying risks hadn't magically disappeared. So why did stocks move so aggressively? The answer lies in how modern markets actually work. Before the rally, hedge funds had become heavily bearish. Many had massive short positions, betting prices would continue falling. Here's the problem. When you short a stock and it suddenly rises, your losses can grow quickly. Eventually, traders are forced to buy back the shares they borrowed just to limit the damage. That emergency buying pushes prices even higher, which forces even more short sellers to buy. And that chain reaction is called a short squeeze. Think of it like dominoes. One falls, then another, until the entire line crashes in seconds. But the squeeze wasn't the end of the story. Huge algorithmic funds that follow price trends, not news, started flipping from selling to buying. As prices climbed, their computer models automatically added even more money into stocks. Then the options market joined the party. Dealers hedging positions bought additional shares, creating another wave of demand. So instead of one buyer pushing prices higher, you had hedge funds, algorithms, and options dealers all buying at nearly the same time. The result? A massive rally that looked like confidence, but may have been driven largely by market mechanics. Whoa, this is why markets can sometimes soar even when the news seems confusing. Prices aren't always moved by logic or fundamentals. Sometimes they're driven by positioning, leverage, automated systems, and forced buying. The headline tells one story, the money flow tells another. And if you understand the difference, you're already seeing the market the way many professionals do. If you learned something new today, subscribe now, because the biggest moves on Wall Street often happen before the media figures out what really caused them. And comment, algorithm, below if you want more videos exposing the hidden mechanics behind the stock market that most investors never see.